We're back with recruitment funding 1 year on. We've got Alastair Logan from Ultimate Finance on his second appearance. He's actually probably one of the first to do one of my other videos a good 14 months ago, probably now. And joining him, this is the first time I've ever done 3 people, and I'm going to try and share a screen. So bear with me. We're joined by CEO of Ultimate Finance, Josh Levy. So I'm covering a really important one today, actually. I'm really excited to talk about this because it's quite depthy and it's quite numbers driven as well, which I love, and I know you guys love as well. So we're going to talk about the borrowing of, I guess, Ultimate deal quite heavily in the recruitment market for invoice finance. We're going to talk about the borrowing of their clients over the last 12 months and how it's changed, and actually how it's going to change potentially over the next 12 to 24 months as well. So I'm looking forward to that. So Al, you've introduced yourself before, so I won't let you do it again. But Josh, if you could give us just a little bit of background on yourself before we jump into question of equality.
Excellent. Delighted to be here, Simon. So my background is banking, and I used to work at Investec, joined Ultimate 2.5 years ago. We've been really trying to position the business as an asset-based lender that does specialist products. And so invoice finance and into the recruitment market is a key one for us. It's one of our largest sector exposures. We, as a group, are owned by Tavistock, which means that we've kind of got breadth of knowledge across different sectors. We've got investments across the world, and actually we've got 200 companies, so we're part of a much larger business, and it does give us that expertise which we can deploy and help our clients with. But the recruitment market is one of our largest sectors across both invoice finance and asset finance, and we've been looking to see how we can help clients, and that's been the focus for the last year or so.
Yeah, wow. Yeah, it's huge. What do you know off the top of your head, what sort of percentage of your invoice finance would be recruitment or temporary or permanent based businesses?
It varies between 15 and 20.
Wow. Yeah. Okay. It's a big chunk, and it's in invoice finance. It's quite a key market, isn't it? Funders like recruitment businesses, temp timesheets, contract payroll, etc.
It's a phenomenal product for businesses, for temp recruitment companies to use. It's also great from a debt perspective as a lender. So we do like it a lot.
Yeah, which is good. So, what I'll do, we'll jump into the question, I guess, straight away, shall we? And talk about the book, because you sent me just a lovely graph, and I just love a good graph. So if I share this, which we'll see whether it happens tonight. Oh, I think I've done it. Bear with me if I'm sharing something totally off a different screen. Talk us through this, Josh. Al, I'm not sure how you want to do it, in which order. I think Josh can talk about the first bit, and then maybe Al about sort of looking to the future.
Yeah, sure. So, what this shows is this is our loan book to recruitment companies. And so you can kind of see steady growth over the 2018-29 period, and then a massive dip as you get into the COVID pandemic through the spring of 2020. What I really want to do is
that looks like it's just, sorry Josh, that looks like it's just started to dip just before main lockdown. So maybe when it started, I think people started to get the judder a little bit, sort of early March, back end of Feb maybe.
It started earlier because we've got a lot of sector exposure into manufacturing, which from a recruitment point of view, which happened a bit earlier than some businesses. So we did see that drop off happen, but really it was the acceleration through April, which is where it all really took a dive. And the reasons, I don't want to spend too long on, but the reasons we all kind of know is the combination of less invoicing, so less going on, so less availability for clients to raise money, but also switch to other products, whether that's VAT deferrals or actually CBILS, bounce back loans. There was a massive, switch from normal liquidity sources to new sources of funding, and that's really what drove that. Our book basically halved in the space of 4 months. Wow. On the recruitment space. Now you can see it bounced back pretty strongly since then, but I think every business through that spring period was tightening the belts, and so recruitment wasn't necessarily something people were doing, and there was a lot of hesitancy in the market, which has changed. And you can see this chart ends in April, and actually May would be a continuation of the bounce back. The recovery has also been pretty strong the other way, and we'll come on to what we think happens next, but this chart does tell it pretty well as a story.
Really does. And so this is only to April, actually, because we started talking about this a few months ago too. So where does the graph estimate? Is it still continuing to grow up? Are you do you know where the figures are sort of from there?
So overall, May was our highest loan book position since February. So actually, it was the highest ever position. We have seen The rebound has been quite strong through this year. It doesn't really show it here, but May was an uptick in its numbers as well.
And we see the main sort of jumps between August and sort of September, just before the third lockdown, and then back up in February to March.
And what's incredible, so what you don't really see that easily here, the dip between December and January is just standard cyclical. So the third lockdown and the second lockdown had very little impact. Businesses had learned how to trade through it, and so we didn't really see the same level of drop that you'd expected or we saw previously.
Yeah, absolutely. Yeah, wow.
Just to add into that, really, from my side, the main sectors that sort of were hit were kind of the manufacturing businesses. So the larger manufacturing businesses or smaller manufacturing that took temps, that took the 1 week, 2 week, 4 week shutdown in the kind of April time. That was where all staffing was pulled. The agencies that sort of continued were the driver agencies providing into food businesses, distribution. They were the
industrial as well, sort of warehouses.
Yeah, exactly right. But it was the certain sectors where most of industry was forced to take a temporary pause that then was a knock-on effect to the recruitment agencies.
Yeah, which ultimately a lot, and I guess I think we might cover that towards the end. But yeah, hospitality as well. Yeah, so some massive changes. So Al, where do you? Al and Josh, that's amazing and really great to share actually. And thank you for sending it across. The next, so where do we see the next 6 to 12 months? What are we going to do another one of these videos in 12 months time and see a graph that just goes like this, or is it going to go like this? Or what's the future? Recruitment, finance.
So from my side, it's interesting because you read a bit about the industry and read surveys and things like that. And I was just looking before this at Bullhorn survey said that temporary recruitment businesses, 75% of them are sort of predicting to increase on turnover in 2021. They should do because of 2020, but people are optimistic. You got to look at sort of the reasons why. I think if you're a business, you're going to be cautious about taking on fixed costs of permanent staff. So if you can take on agency staff, gives you the flexibility. You can call your staff on and off. You've still got good demand in the nursing and healthcare sectors. And again, linked to what I've just said about warehousing, distribution. Our buying habits have changed over the last. Personally, 12 months ago, we weren't having as many deliveries, but if you walk around or where you live or walk down the road, Amazon and XY, everybody else, it's more deliveries. So the infrastructure behind that, the picking and packing, the drivers, the trunking in between, this is, bring it on. I think for my view, where we see this year going forward is, the challenges for recruitment agencies are, can they find the staff? Can they win new clients? Getting out to there and, skill shortages, HGV drivers, trying to find these people because there is, there's the work there, but it's finding the people to do the work. And I think that'll be this year, the work will be there if they can find the people really. So, but
absolutely.
Josh will comment a bit about on the skill shortages in a moment, but as a business, client numbers for us are month on month going up.
That's good.
Businesses that have benefited very much because of COVID. So in terms of healthcare, social, nurses, HCAs going out there, that they've done very well. Certain agencies have reached peak periods and have actually had no decline. I did an agency a couple of months ago where they provided timesheet-based people do sort of cleaning stroke, very basic maintenance linked to the underground. And as we all know, London has been affected in the last 12 months. So their business actually went into a sort of a hibernation mode for nearly 12 months. But out of May and the lockdown restricting, it's all been positive and people moving around. So their actual business has completely restarted. They've been lucky enough to take advantage of the government support in terms of VAT deferral and a little bit of VAT. But now, they're a prime example of where 2021, week on week now, as in people are moving around, people the work is there for those guys.
Staff requirement is there more and more, and
exactly right.
That business will continue to grow with the underground and things like that, with more people going back into the city, I guess. So
and another pride one that we advanced, I think it was circa 750,000 to last month. It was linked to the events industry, and as we all know, the events industry is decimated. But you've got security guards, you've got just general administration people, and people on site. These are temporary workers that go from event to event. This demand was not there over the last 12 months. But we all know now that there's more concerts, gatherings, football stadiums,
vaccination centres.
Yeah, exactly right. They're starting again. So hopefully these businesses will, have better times, and by the end of the year, hopefully they will have a very good year.
Absolutely. And I guess
positive, and we're here to support their working capital each week.
We're so focused on the recruitment market, but having Josh on, and obviously the Tavistock Group, Mitchell Butlers, etc. I was keen. We obviously deal with quite a few hospitality recruitment business, and keen to sort of see your view, I guess, of the hospitality industry, not just recruitment specific, really, but actually, it's had a rough ride, hasn't it? So where do we see that? Let's probably not talk about the past too much, but where do we see that going?
Well, so if I do one thing about the past, the hardest thing for a hospitality business was not the shutdown, it was not lockdown, it's the reopening phase. And what you're seeing with all the stories about labour shortages and skilled gaps is because every single business has been opening in these sectors at exactly the same time, and there's the same requirement for staff. And so for a hospitality business to try and find the right level of resource has been really difficult. Furlough has hidden a lot of things, and that's probably been what no one quite understood, which is you've got a labour force of which X percentage on furlough still, but you kind of assume they'll come back, and that's what the sector's found, which they haven't. Whether that's for leaving the country, moving to other jobs.
Sorry, Josh. Yeah, I was talking to somebody. Is it a lot of them people changing their careers? People in the hospitality industry that are going to. I've heard of sort of a lot of people changing that they've had to, and then they're working for in the logistics or in the industrial industry and things like that.
Yeah, definitely. So there's a lot of people were not comfortable working in human contact environments, and moved into different industries, different roles. I think the hospitality industry needs to needs to be recognised for what a valuable place it is for people starting careers and career paths they can get. But actually, at the moment, they are finding it quite difficult to recruit, and we're seeing definite demand for temporary staff in those sectors. And again, Al mentioned the events industry. Also within our group, we own Spurs, and seeing all the football stadiums around the country opening on exactly the same weekend 2 weeks ago, that drives a need for the staff, and the only way to fulfill these demands right now is temporary recruitment. And actually, I do think that's a big opportunity for the sector, and I think businesses generally will be looking for more flexible.
We're having such a great conversation. I'm not going to stop and cut the video here. I've just muted you by accident, but sorry, Josh, keep going.
I can't remember where I stopped.
I've thrown you off there, but temporary recruitment probably being a big part of actually getting people back into hospitality.
So for hospitality and any business really, a lot of the companies are looking around and thinking, how do they have a more variable cost base so that they can move up and down? And so flexibility is key, and all of that points in one direction really, which is how to utilise temporary recruitment models in a different way. And I do think that's a huge opportunity for the sector going forward. And look, as a funder, we're here to support that 100%.
Yeah, it's good to hear as well. Yeah, and it will. And hope, fingers crossed. So are you seeing things short term pick up really, really quickly now? Obviously, lockdowns come out and everyone wants a beer and a bit of food. And is that affecting Mitchell Butlers, I guess, directly?
Yeah, it helps. The weather's been great, so that's always one thing that drives people to leave their homes. We have seen a good start across the sector in terms of reopening, but really until we settle down, probably a month from now, see where things are, that will be the more underlying trend. But a lot of businesses haven't reopened in the sector, and that has an impact. The strong ones will survive and will thrive out of this. It's unfortunately the ones that were less well capitalised going into the pandemic that have struggled.
Yeah. It's tough. Yeah, we should have Compare Hospitality Factoring and set up another business and just focus on this hospitality market. I think it's going to be an interesting one coming. So, gents, thanks so much for jumping on and joining me. Really appreciate it. I'd love to do one in 12 months to see that trajectory of where your recruitment clients are. So we'll try and put that back in, because another graph will be ace. And I'm hoping that it's going to go the way that Al's saying, and we're going to be there. So, but no, gents, thanks so much for jumping on. And,
Thank you.
We will, I'm sure we'll speak soon.
Definitely. Thanks, Simon.
Thanks a lot. Thank you, Simon. Cheers,
Cheers, gents.
Bye.